Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today, I'm joined once again by Lady D. Lady D, what happened to the
Morning,
market?
everybody. And what a morning it is. Oh my goodness.
Yeah, a little bit of a change from where we left off yesterday.
Yeah, a little bit of a gap opening this morning. What do you say about that?
Yeah, it's a gap. There's definitely a
It's
gap.
really a gap. Yeah.
Yeah, it's a big one.
One of the biggest I've ever seen.
It is actually really big.
It's
All right,
huge.
let me jump into some TA. We'll talk about what is happening and what I think is going to happen next. So, if you've been following the channel last week or this week, I have been beating this drum, beating it and beating it and beating it, saying it doesn't matter who wins the election. We just need to know a winner. We just need to have a clear winner, and that will cause the market to go up regardless of who it is. This is something called event vol. And the idea is very simply, most of the larger participants in the market, the managers who are managing hundreds of millions of dollars, they own stocks. They have to own stocks because their success is measured against the growth of the stock market. So if they don't own any stocks, they're not getting that growth, and then they're not going to be able to match the market or beat it. So they have to own stocks. But when there's a big event coming along where something crazy could happen, where the market could have a massive sell-off for some reason or another, they hedge their long position. They buy puts as a way to protect themselves so that if the market crashes, they can hold on to the shares that they have, take profits on the puts, and be bringing in cash, therefore beating the market. They can also use that cash to buy more shares at a lower price, but that's a whole nother conversation. So they buy a put as a hedge to their underlying stocks that they own. Well, then the market makers that sell those puts then short those stocks or indexes that they've then sold the puts on for the exact same reason. So that if the market crashes and it goes lower when this event takes place, then they will be short and they can make money off their shorts to pay for the options that they sold that they have to now pay out the returns on those. So you've got half the market hedging long and the other half hedging short, basically creating a lot of downward pressure on the market, kind of holding things flat, holding things down. Once that event is over, once the fear of the market crashing is gone, both sides have to unwind their hedge. The market makers that sold the options have to start to get out of their short positions on the stocks and the indexes, and the players who bought the puts start exiting those puts, right? So everybody's taking risk off the table. What is happening to the price of assets during that time? Going straight up, right? Because you've got people getting rid of puts, which is positive momentum for the market, and you've got people covering short positions, which is positive momentum for the market. So prices go straight up. So I'm not trying to say I told you so, like in a look at me and be impressed type of way, but I'm trying to tell you so that you can learn this mechanism for the future. When I've been saying for the last few weeks, it doesn't matter who wins, the market will go up. This is exactly what I was expecting. Now, I don't think it's over. I don't think that the short covering is over. I don't think the market makers have fully unwound their hedges. I don't think that the larger participants are completely out of their puts. I think we're going to have a lot of momentum to the upside in the days and weeks ahead as this thing continues to unwind. Okay. So what does that mean for us here today? Right? Great. I hear you, Charles. You're bullish. You think the market's going to go up over the next few weeks. Great. What do I do today at this moment when we're opening with this massive gap up? Well, I would say first and foremost, large gaps often don't fill on the first day. Let me just get my drawing tool up and running here. Okay. So when you have a gap that's this big, the odds that the market is going to be able to come all the way back down to yesterday's high actually aren't that great. Now, how would I, what if that happens anyway? I can still make money on a gap fill, but my first assumption should be that the market is going to gap and go. It's going to try to fill the gap and then turn around and start heading higher. So even if my first assumption is the market is going to try to fill the gap and I'm either shorting or just not longing yet because, I'm waiting for a bounce, I'm waiting for support, right? Either way is fine for a potential gap fill that could happen. If I take partial profits on the way down because I'm seeing support and I think the market is going to turn around and head back up, and then it just keeps going lower, there's nothing wrong with that. I'm not losing any money. And I can always enter shorts if we start to continue the momentum down towards the gap fill. But again, I will just say, in my mind, a gap fill today is the least likely scenario. I do not think that is a high probability here today. So what I'm thinking is the market will start to fill the gap, will find support, and then we'll turn around and start heading higher. Once again, the new all-time high is weak as it was before because it was made in an overnight market. When the market opens today, we're going to correct that old weak high, but we've left behind another one. So that tells me there is a magnet at the all-time highs pulling on price, which we could absolutely test today in the regular trading hours. So all I need to see is support somewhere inside the overnight range. If I'm seeing support, it's a reason to get long, targeting a move to that overnight high, which is the current all-time high. Okay, now where could I potentially see support? Well, that's where it gets tricky, right? Because, it's not like everyone that wants to be long is long, right? People are going to want to buy dips, but we won't know what that final dip will be. What is the lowest the market can go? So first and foremost, a lot of times the market only gets half a gap fill. I would call that half gap fill somewhere here around 75. All right, we'll say 80 to 75. This area in here is half a gap fill. So any support above that, I would be very cautious, right? If the market can't get the half gap fill, it may still need to. I'd be cautious buying support above the half gap fill. Support around a half gap fill, somewhere between 75 and 80, I would love to buy with a very high probability, and I would not be interested in trying to buy support below that, because if we have this large of a gap, we get a half gap fill and we don't get support, we may actually need to fill the gap. So if we don't get support at a half gap fill around 75, I may even be looking for shorts to fill the gap. But prior to that area failing, my assumption is this market is going to go up and I'm looking to buy support. So I know that's very confusing. Basically, cautious to buy above there, but willing to. Absolutely willing to buy around 75. But then a move lower completely changes that narrative. I'm no longer bullish. I'm looking for a gap fill to yesterday's range. Okay. Now, what about a gap and go that doesn't pull back at all? What if the market opens and it just immediately starts to trade higher? That is one of those clinch your butt cheeks, get in a trade. Don't look for a perfect entry. Just get in a trade for momentum to the upside. There is a real chance that once that opening bell rings, a lot of people are going to be exiting shorts and looking to get long, and this thing may just straight up gap and go to the upside. That is less likely to me than an attempt to fill the gap first, but it is possible. So that is the way I see the market this morning. D, what are your thoughts?
Yeah, I just want to add to that. Also, I think because the gap is so large, and I did a study on gap fills actually, where I went back and I studied a bunch of them. And I think we talked about this last week. Be very careful. Don't put your take profit at or below the top of the gap. Give it a point or two above, maybe 3, and take profits early, because the market loves to flip right before that gap fill, because it knows, like, a lot of retail traders are waiting for it to fill completely. It'll bounce a lot before it fills. So just watch out for that. That's just the only advice I have on that. I noticed in rewatching plays on gap days that happens quite often. So just be aware of that. Okay, so on the NQ, I just wanted to show from yesterday something I thought was really important. And I'm going to show you some long-term charts that supported this. But as we talked about last week, watching the market pre-open, I usually start watching it around 7. And between 7 and 8:30, I sort of can get a feeling of I think what's happening pre-market, how bigger hedge funds may be positioning themselves. And yesterday, once in the morning, we got through this area of resistance right here, this big blue node in the overnight. the market really picked up steam, and there was kind of a lot of buying going into the open, and it was the tempo. Here's where tempo comes into play too. It was quick. The tempo was quick, and it was kind of a lot of very solid candles. And I noticed that. So then when I definitely wasn't going to go short at the open. If we notice what happened, the overnight, I mean, there was no retracement at all of the overnight range. It just like shot straight up. So we single printed out of the overnight, which the level was here. So we single printed, got above the overnight. The momentum kept going, time and volume near yesterday's range. We single printed out of both the overnight and yesterday's range very quickly. Now, in my mind, that's a total rejection of those price areas, right? So I was only going to look for long trades. So I just wanted to point that out for the beginning of yesterday in case some of you got short or got caught on the short side, that there were signals even before the market opened to be long. Okay, so the market opens, we single print out of there. We have the POC. We have a prominent POC. And what clues could we have seen that maybe we should, it started to open and it looked like it was going to be a trend day. But then once we kind of started consolidating a little bit, and we got to this level up here at the top, we did in the, what period is that? There was like, yeah, there was a selling tail up there, and I saw the volume and the time taper off. So at that point, I got out of my long. I also want to point out that I was also watching this area right here, this big, large node here. So I was long pretty much near the open, and then I got out around this large node because I wanted to see what was going to happen when it got there. And that kind of is where the levels started consolidating for a while. So if that helps anybody, yesterday, that's what happened yesterday, and that was my plan. I just wanted to share those details with you. I also wanted to show you on the long-term chart some, let me see, let me open it. I want to show you some of the long-term charts that I was looking at also. Okay, so here, this is the monthly, and I showed this last week too. I mean, we have basically this retest failure that happened on the monthly bar. This is a massive wick, and then the next candle also had a pretty massive wick to the upside. So when we had this retracement, and I think, people were panicking at this sell-off, but then it basically just tested this trend line, and then we totally reversed. So I was looking on the monthly. I was noticing that there was this retest that put me on the long side in my mind. Then I was watching this trend line that was kind of in the middle of the monthly bar, and I'll show it to you on the weekly. Hold on, is it? Yeah. So here's that trend line on a lower time frame, and here's the retest again. The retest now on this time frame, you have both candles ending green. That's a stronger signal of the retest failure if both candles are up to the upside green, which they were. And then we tested this trend line, and now, okay, today we've completely broken out of that area. But so if that helps anybody, and this is that buyer zone last week we talked about a lot. We kept bouncing off this area, and I remember, Charles, there were a bunch of weak lows at one place. The market was like kind of pinned in this area. And I said, be careful, there's buyers down there. And that's exactly where every time we kind of came to this level, things turned around quickly and the buyers came in. So if that helps anyone to look at the longer time frames, I think that's great. Now look at this gap on the NQ. I mean, it's just enormous. And I purposely took all my levels off my charts now because I want to I like to add my levels on my charts every day because it kind of reorients me into the important things I'm looking at. Also, I want to point out, yesterday I was noticing that there was this weak high here that probably was going to get repaired once I was long in my mind. There was 2 weak references in a row. There was this 2 in the day a couple days ago, so I was watching that. So anyway, that's my NQ analysis for today. I have the exact same orientation as Charles. I agree with him completely about, if the market can't try to fill the gap, go long, because there's going to be a lot of short covering. And yeah, that's what I got for today, Charles.
Yeah, and the NQ still hasn't touched its all-time high, so that's another target to the upside.
Yeah.
People can be bullish. By the way, did anybody see Tesla this morning? Jesus.
Yes. Oh my gosh, I'm so glad, because my son, I had told him to buy Tesla. He's only 18, and he's acquired this portfolio because I'm recommending all these great stocks for him, and he he wanted to get out of Tesla a few weeks ago. And I was like, no, just that's one to hold. And now he's like, I'm so glad I didn't listen to you.
Or that he did listen to
Or that
you.
he did listen to me. I'm so glad I listened to you and I didn't sell it. I was like, yeah, because now look at that.
Yeah, it's so funny the way people emotionally react to things. Like nothing has changed at Tesla, the company, from yesterday to today. But just the fact that now, you know, he's best friends with the new president is got everybody super bullish on the stock. It's really weird. But Tesla is a great long-term hold, especially for your son if he's very young, because
he's 18.
Yeah, once they get those autonomous bots built, once those machines that the humanoid robots, you're talking about factories all over the world are going to make orders for those things. And Tesla is one of the few companies that has manufacturing now all over the globe. He's got those gigafactories everywhere. So he'll be able to start producing humanoid robots to take over the whole world's workforce. That's a good company to own.
Yeah, I also got him into NVIDIA very early on and Taiwan Semi. So I have to say he's doing pretty well for 18 years old. So
there you go. Well, now you know he'll be able to take care of you when you get old.
Oh my gosh, you have no idea how much I need that. Being a musician my whole life, and then, oh man, so.
There is a comment I wanted to respond to here from Square Trader who says, Lady D, sad to see the show is ending. Hopefully it will be temporary. Aww. As a fellow NQ trader, I have always enjoyed your insights and input on the Q. You and Charles do great together.
Oh, I love that. Thank you so much for writing that. That means so much to me.
I wanted to use this as a reminder, both to you, literally, Lady D, and to everyone in the chat, that you guys are more than welcome to share your ideas in the chat. You don't have to, you don't have to be afraid to give your opinion, even if it contradicts my own or whatever. So, D, next time you see the market single printing out of the overnight range and you think this is only a reason to go long, jump in the chat and say, hey, everybody, we're single printing out of the overnight range. To me, this is a reason to go long.
Yeah, I will. I'll definitely do that. And also I wanted to say, I think I'd love to, I know Charles and I briefly talked about this, but if you guys think it would be interesting to me to make for me to make some videos on doing the market replay, because I love doing that, because I feel like that's like a huge way to kind of learn and kind of rectify any mistakes that maybe you've been making repeatedly. I always do my market replays and I learn a ton from them. So if you want, I can make some videos on the market replays, maybe, a few days a week, if you guys think that would help you. And then Charles can post it on the Pirate Traders, forum and stuff. So what do you think about that?
Okay. If you would like Lady D to start doing regular videos where she replays the day and explains what you're looking for, please type the word yes into the chat right now. Lady D, how many yeses do you need to make a decision on this?
Oh, it has to be a lot, because that would take a lot of time. I'm happy to do it if it really helps people, but it's going to be a big time commitment on my part. So I need a lot of yeses or I probably won't do it regularly. Oh
okay, we got 67 people here. What is a lot? Are we talking half? Do we need half?
Let's see. How about 3/4?
3/4.
3/4, I'll do it. I'll do it for everybody.
Okay, so we need like 40 of you to say yes. Get in that chat and say yes. We're talking about videos breaking down what happened that day in the NQ, what signals you could have been looking for. Learning lessons, watching
and
as
I'll
the
share
market
my
changes.
Mistakes too. I'll share my mistakes because I make plenty of them. I'll share my mistakes so that other people don't have to lose money on their mistakes and correct it. I've made plenty.
That's not enough yeses, guys. We need more yeses. And I see some of you are doing multiple yeses. Only one yes per person here. Okay.
Okay. I think I'm getting convinced because this is a lot.
Yeah.
And I truly appreciate it. Thank you.
You are loved, especially
you guys are showing me the love. I'm going to show it back. I'll start making these videos for you.
Awesome. So yeah, and I really am making that point though, that like for everyone out there, I know I don't talk about the NQ and a lot of you are trading the Q. Please feel free to have a discussion in the chat about things that you're seeing and what they're telling you, and share with each other, because, you know, if it's not a market that I'm trading, you can get a lot of advantage from that.
Yeah, and the NQ really does move so differently from the ES. So I have to admit that it probably would be nice for everyone to have the perspective of someone who only trades the NQ mostly now. I, would be happy to share that, because there are a lot of differences in the tempo and the movement. And it's, I think that's why, as being a musician, my brain is so used to having to sight read music very quickly and make decisions about different data points like dynamics and phrasing and notes. That's what makes me really good at the NQ. That's just how I'm trained. My brain is trained to be able to see things very quickly and react to it. So
yeah, we've had this discussion. I'm the opposite, because I come from the world of video editing, where we watch a thing over and over and over until we're absolutely certain the change we want to make. It's like, that's why I need the ES that moves much slower, so I have more time to think.
Yeah, well, that goes to what you teach in your class, Charles, about the psychology of your own personality. I mean, you and I can make money trading all day long, and we can try to teach someone else to do exactly what we're doing. But if their psychological makeup is different than ours, it won't work.
100%.
And I think that's why every trader really does need to find the system and the trading plan that works for your psychology and your mentality. So, well, this was great. Thanks, everybody. I'm so happy to feel all the love from you all.
Yeah. You guys can give me love too, by the way. You don't have to give it all to D.
Well, Charles, you get love all the time, please.
No, just kidding. No, I do. You guys know I love the audience. The last thing I wanted to mention real quick is that we've got the FOMC happening today and tomorrow, and Powell's going to speak tomorrow. That's a pretty big event, may have some effect on keeping volatility a bit tighter for the next day. But like I said, there's potential for a lot of short covering today, so it could be an interesting day.
Yeah.
All right. Thank you, Lady D. We'll see you in 2 days.
Okay. Sounds good. Bye, everybody. Thank you.
Bye-bye.